Okay, let's get right into it. Gold and silver prices. They're in a bit of a free fall. I mean, after hitting these incredible record highs, they've suddenly just taken a nosedive. So, what's the deal? Is this just a normal market correction, or could this be a golden opportunity for investors? Let's break it down. So, to really wrap your head around this, get this. In just 2 days, the price of a single kilogram of silver dropped by over 50,000 rupees. That is a massive drop, and honestly, it's just the tip of the iceberg. Now, with wedding season happening right now, your first thought might be, wow, this is fantastic news if I'm planning to buy jewelry. But, is it really that simple? We need to look past the headlines to see what's actually driving these prices down. And what about gold? Well, it turns out this isn't just a silver story. Nope. Gold prices have also taken a pretty significant hit, making this a much bigger market-wide event. Just look at these numbers. In only 2 days, 24-karat gold fell by over 7,400 rupees for every 10 grams. Even 22-karat gold saw a drop of more than 6,800 rupees. I mean, we're not talking about minor little market fluctuations here. This is a really significant price correction. So what does this actually mean for you if you're thinking about buying? Let's take a quick look at today's rates in some of the major cities across India. Here's a little snapshot of what you'd be paying today in places like Delhi, Mumbai, or Chennai. And you'll notice, right, there are these slight differences from city to city. That's usually because of local taxes and demand. But the real story, the bigger picture, is the overall price. It's way lower than it was just a few days ago. All right, so this brings us to the most important question, right? What is causing this? Why are prices falling so hard, so fast, especially right after hitting those record highs? Well, according to the experts, it's a mix of three key things. First up, the US dollar is getting stronger, and that almost always pushes gold prices down. Second, there's this thing called profit taking after that huge run-up in price. And third, something a bit specific to silver, an increase in margin requirements, which just makes it more expensive for traders to bet on silver. Let's talk about that profit taking for a second. It sounds technical, but it's super simple. Imagine you bought gold when it was cheaper. You've been watching the price just climb and climb, hitting all-time highs. What do? Well, you sell, of course. You lock in that profit. Now, just imagine thousands and thousands of investors all doing that exact same thing at the exact same time. That's what's going on, and it's flooding the market, which pushes prices down. One commodity expert, N.S. Ramaswamy, he put it perfectly. He calls this drop a natural shakeout. Basically, prices went up too high, too fast, and this is just the market correcting itself. It's not necessarily some sign of a long-term crash, but more of a reaction to what he calls an excessive rally. Okay, so if this is just a shakeout, what do the experts think is going to happen next? Is this just a temporary dip, or are we looking at the start of a whole new trend? Well, here's the interesting part. Despite this short-term drop, pretty much all the experts agree on one thing. The fundamental reasons to own gold, they haven't gone anywhere. We're still seeing huge buying from central banks, there's ongoing geopolitical risk all over the world, and investors still need to diversify. In other words, the long-term positive trend looks like it's still very much intact. And a huge piece of that long-term puzzle is institutional demand. I'm talking about central banks around the world. They're expected to buy over 800 tons of gold this year alone. That's a massive buyer in the market, and it creates a really strong floor under the price. And this is a really important point, we can't just lump gold and silver together here. While gold's long-term outlook seems really solid, silver is facing a bit more turbulence in the short term. It's kind of stuck in a price range right now, and according to experts, it's going to need a pretty big push to break out and start rallying again. So, we've got a short-term drop, but a strong long-term outlook. What does all of this mean for the future of gold prices? And maybe more importantly, what's the key takeaway for you? This quote from Aprav Seth over at Samco Securities, it really just sums up the whole feeling among serious market watchers. The general view is that the long-term trend is still pointing up. So what are the smart investors doing? Well, they're treating this price drop not as a reason to panic, but as a chance to buy. And what could that look like in real numbers? Well, that same analyst predicts gold could settle for a bit, maybe finding a bottom around 1.32 lakh rupees per 10 grams, before eventually starting to climb again towards a potential new high of 1.80 lakh in the coming months. Which leaves us with one final big thought.
We have a short-term price drop that's being driven by profit-taking, but at the same time, we have a long-term outlook that's supported by massive institutional buying. So the question for everyone watching is this: is this temporary dip the exact golden opportunity that investors have been waiting for?